Hey all, welcome to Share Trek. This is Raj here. And as you know, this is the weekend spotlight and we have Sandeep with us. And he's going to talk about a company and I'm not allowed to say which one it is. It's going to be a suspense and you guys are going to enjoy it. So that's the agenda for today. And let's get started. Welcome back, friends. As I mentioned, Sandeep is here. I'm going to hand it over to Sandeep and I'll come towards the end if I have any points to talk about in Gilead. So Sandeep, please take and run.
Thank you very much for that beautiful introduction, Raj. Feels great to be here and interact with all the Shared Trek friendos out there. Hope you all had a wonderful week and hope you're ready to do a little bit of detective work for this interesting company. This week's company, we are talking about a powerhouse in the stock field, but is a company that was once approached the Oracle Omaha himself, Warren Buffett, to see if he can invest and was rejected at the time. It is a company that was unprofitable for 14 years before seeing $1 of revenue. It is a company that took 9 years before its first drug approval. And today, this company has one of the best cash flows in the entire biotech field. It's a company that is up many thousands % greater than where it IPO'd at. It's a company which today is a household name in the HIV and other biotech fields. Now, pause the video, take some time, talk to your significant other, talk to whoever, talk to your kids. Maybe you have 3 kids and you're in middle of nowhere wondering, hey, what is this wonderful company? Take a guess, write it down, and I'd like for you to remember that guess and compare it to this answer, because today we are talking of Gilead Sciences. If you got the answer correct, by the way, leave a thumbs up because I am giving you a thumbs up. This company, Gilead Sciences, is a company that was unprofitable for the longest time. And if that sounds like it's familiar to some of the companies we talk about on this channel, some of the more genomics plays, then you'd be correct. In fact, a lot of companies in the biosciences field, before becoming the powerhouses, before becoming the household names that they are, started off as struggling companies, not making a single dollar for years, for decades, until they finally made that breakthrough. And then look at them today. So for the folks out there wondering, when's genomics, when's some of these names gonna get their spotlight? If Gilead is an example, it might happen. So don't always just give up hope. Think, and also think of all the good that some of these drugs can do, because this company we're talking about does quite a bit for the HIV community. So Gilead, its name actually comes from biblical origins, where in the Bible there is a line talking about the balm of Gilead, which is a type of ancient medicine that was discussed in that Bible text. Very fitting. And Gilead, in their most recent earnings, that company got beat up, fortunately. Despite being in some of the biggest indexes and biggest funds, S&P 500, and a large component at that, it's not liked right now. And why is that? Why is that? That's what we like to look at here on this channel. So what I have done, my friends, is before we take a look at what the analysts are saying, I like to take a look at what the numbers are saying. What are the financial statements saying? I've given a little bit of a summary here. As you can see that the company right now, although its free cash flow has declined just a wee bit from the prior quarter. It's expected to go up by the end of the year. Right now, it's sitting at over $1 billion in free cash, which is very nice. And one thing I can tell you out there, friends, is looking at its current liabilities, its current bills, it has enough in just revenue alone to cover that. If we were to take a look at some of the other metrics, I'm not going to bore you too much with what these numbers mean. I'm just going to tell you that its profit margins, its net income margin is increasing massively, while its gross profit is remaining about the same. Its growth, it is decreasing a bit, and I did find out why, but we'll get into that a wee bit later. This is something that is very intriguing, which is dividend payout ratio. Its dividend is staying the same, that 75%, 75-cent dividend, yet the percentage of their revenue that's being paid out has decreased, which is very great for any dividend investor. That's something you like to see. Sustainable growth rate, we covered it in an earlier video what this means. It is, if they were to utilize all their resources, how much growth can they see? So looking at a bunch of these metrics, the company is doing quite beautifully. It's quite well capitalized. It's got everything going for it. And what I've done here is compared it to the S&P 500 healthcare sector index. It's beating it on nearly actually just about every single metric. Gilead is doing better than. This is a little bit messy. So what I've done is looked at straight to their earnings. As you see, there's been a significant breakdown of some of these drugs that they got out there being sold for profit. 70% of their money actually comes from the HIV sector, followed by cell therapy, liver disease, and some of these other wonderful drugs out there. And that's what I've highlighted over here, 70%. However, what the company did do is they talked about where the most growth is happening, and that is in the oncology field. The company, Gilead, with some of their acquisitions, some of their mergers, they're kind of capitalizing and seeing the trends and doing what is very favorable to shareholders and delivering or bringing back some of that growth. What I saw over here is there hasn't been too much of a change in their geographical money, but maybe there's an opportunity for something happening overseas, something happening outside of America, maybe out there in India, in Asia, and other places. There's opportunity to grow as people become much more knowledgeable on biosciences. Maybe that'll be good. I'm not going to bore you with the numbers. I've just given you the summary. Revenue is increasing while R&D remains stable. So they're making more money, but they're not spending too much on R&D. At the same time, their costs are remaining about the same, and their general and administrative costs have actually decreased significantly. As a shareholder, or as someone who might be a potential shareholder, this is what I like to see. I love seeing that the company is becoming much more efficient, much more able to increase revenue, but not increase costs at the same time. What else do we know about this company? What else do we know about Gilead Sciences? We know that almost three-quarters of their revenue comes from HIV. I will tell you that the company is spending some of their acquisition time in immuno-oncology plays, particularly acquiring a company called Zinthera, pardon my pronunciation, for cash of about $200 million. Of that, 170 was used in R&D, which means that R&D number might be a little inflated because of acquisition costs. So I'm not too worried about that. Another thing is a T immunity, which was a CAR T therapy play, which they invested $300 in cash in, and future payments of about $1 billion, which is something we got to consider in the future. And when I brought up that list of some of their partners, there was a couple partners, a couple names you might have thought of, which are Arcellx, Pioneer, and Tizona. These companies, Arcellx is a company that deals with CAR T and myeloma. What they're doing is they're working on the drug together. We got the well-capitalized side in Gilead and the great research, up-and-coming super side of Arcellx. This is kind of like, hey, we got a veteran player on a sports team, and we got that up-and-comer who's full of energy and full of drive. We're going to have the veteran one teach this person how to play the game, how to play ball. And this one, full of the energy, we're going to go get that shot, spinning that profit 50-50, which is nice. It's nice to see that they're helping the little player. Well, not so much little player, but they're helping some of the ones smaller than they. Pioneer, splitting profit, but they also acquired 49.9% of the company. Same with Tizona, which is cool. Why is the company not doing so well? What I've done is I went ahead and took a look at some company analysts. And analysts say that although the company did beat on EPS, beat on revenue, and beat on their prior guidance, they delivered lower than normal guidance for the upcoming quarter. They say that they're not going to get as much profit margin for the upcoming quarter, which is going to be the end of the year. And that, in my opinion, might have overly beaten up the stock. And some of that might be because it's a trend I've noticed in the markets where people are moving away from some of these more Dow Jones sort of super established dividend paying companies, these safe companies, and moving them more into some of the more tech companies, some of the NVIDIA, some of the AMDs of the world. I'm seeing that big shift because these companies, these more established biotech companies, didn't see too much of a dip. Some of that because of coronavirus, some of that because of stimulus, some of that because they're well capitalized. So maybe this company is going through that valuation beatdown earlier that other companies are. The company is said that it is seeing a gross profit margin decrease of about 77%. However, if you read the earnings, what I did, found out that they're attributing this to intangible asset amortization for the Trodelvy breast cancer treatment. They're gradually writing off some of this for the gross profit. So it's not exactly what you might think it is. And the company, one thing that I noticed from their earnings is the company has a lot of bonds, and some of those bonds expired this September. In fact, they paid back about $2.2 billion in bond principals back, which they checked out those bonds a while ago at 2.5 and 0.75%. Very, very almost free money compared to what inflation is. But they have to pay back the principal. They also issued new bonds at 5.55%, which are going to come up in 2050 and 2075. But that's a long-term debt issue. I want to focus on the current debt, which this company, it covers current debt. It's got enough cash to cover its current debt. Accelerex, that company I mentioned earlier, huge premium. What a home run that was. Over $200 million this quarter alone generated from its cell therapy products. So you're going to say, hey, this company is cutting R&D while maintaining growth. It's cutting general administrative while maintaining growth. It has a $2.5 billion credit line. It has not even touched. It's got enough cash to meet all of its issues. Why is it not being liked? Why is it being ignored? It's got super powerhouses like Clusa, which is super profitable. Why? In my opinion, I think the answer is related to growth. Company is growing, steady growth rate, just everything is compared to something else. Its growth just isn't what it used to be compared to what is out there in the market. And remember when I was talking about, I told you I'll come back to this, the dividend. Its dividend payout at one point, it was paying almost 100% of its revenue to its dividend. I am just a guy who makes YouTube videos once a week. I am not a financial advisor or analyst or anything, but as somebody who is an investor who invests in companies, what I'd love to see for a company like Gilead, and this is going to be a very controversial point. I'd love to see them, if they were to do this tomorrow, I consider them as an investment. I'd love to see them cut their dividend, cut that what seems like a massive anvil in some cases, where in some cases they're paying most of their revenue out to a dividend, and dedicate that same money to growth, to revenue. Before you turn off the video and say this man is out of his mind, Intel did this and now is one of the biggest growth plays. It's up, I believe it was 70% on the year when they cut their dividend and said, we're going to focus on growth and we're going to become a growth monster. This is an unpopular opinion, but I think that this is what's going to could bring that market cap down, could change what it's trading very, very cheaply, could change that into a positive. It's something to consider. Oh, and before I forget, why is their tax rate is actually going to decrease? That is because it's writing off some of its assets over time. It is an accounting play. It's purely just strategic accounting. As a guy who loves accounting, I could respect that. So Oracle of Omaha might have said no a while ago, but the company made it. What companies are also going to make it? I can't say yes or no, but I can say that there's hope. And for the folks out there just struggling, I can never know your pain. The folks out there struggling with HIV and other issues like oncology, cancer, and liver issues. I can never know what's happening, but I just hope and pray that Gilead and other players are providing some solace and providing some help. So is a company going to cut its dividend? Probably not. Is the company going to continue to grow? Looks like it, except for the upcoming quarter. But what's going to happen to the company? It's trading super cheaply right now. Price of earnings about 11. Earnings per share 4.6. As I showed earlier, better than the healthcare index. It's trading cheaply. Looks like it's almost at a deal. But how the technicals look, Raj? What do you think? What do you think of that? I looked at the fundamentals, but I'd like to look at the other hand and say, hey, do we see more pain? Do we see what's going on?
Yeah, so I think I took a few notes while you were doing the fundamentals. So the things that struck me was that the dividends are sustainable at this point of time. So that looks good. HIV is a weak spot, in my opinion, for future because HIV has got a lot of external pressure from World Health Organization, developing countries, philanthropic organizations, all of them requesting for subsidized licenses, subsidized drugs. So if everything like 70% of revenue comes from HIV, it's going to be under a lot of pressure because somewhere or the other, they might have to give it free to Africa or some other country. So those kind of things can happen. That will be revenue gone. But if you look at it from a humanitarian point of view, why should a company not allow that to happen? Because people are suffering. So it's the place where the rubber meets the road, where all those difficult decisions have to be made. So that's the reason why I am saying that HIV is a weak spot in future, because as HIV patients start getting restless, as health ministers and as politicians start getting restless, that has been multiple decades and we have not had solution, they would want to have all these ART therapies. They are already subsidizing it and giving it for free to the patients. When I say they, I'm talking about governments.
Yes.
But the ability to make money out of this without restraint is not there because of the humanitarian angle. So that's the reason why I was saying that. It's like if you're running a hospital and someone comes with a life-threatening emergency and you're going to say that you need to put a deposit of $50,000 before I can take you in. That's a very hard conversation to have. That's a very difficult place to be in. This is something akin to that, in my opinion. I could be wrong, but this is the way I look at it because I empathize. Now, the other thing I noted is that the allocation to cell therapy is really good. That bodes very well for the future. And those acquisitions are also pretty good, like 49%, 49.9% on 2 companies. And I was also thinking that given their cost profile that is static, right, for their R&D, the cost profile is static. And when it comes to their operating expenses, it is reducing. So reducing operating expenses, I'm really happy about it. But the static R&D gives me a little bit of concern, because with such a wide portfolio, either they have done economies of scale or they are going slow on something to save the cost. I don't know what it is, but when I look at those 2 data points together, that gives me a little bit of concern. And along with that, if I put the weak guidance that they are given for going forward, I think analysts might probably put all these data points together and they might think that something is not right. And we don't know what it is. And when we don't know, and when we think that it's not going in the right direction, we might as well give a weak guidance. And that could be the reason why the share price are low. And then the other thing I saw, which I noted towards the end, you said that they have redeemed bonds around $2.5 billion worth, which were at 2.2% or something. Yes, and they have reissued it at 5.55% because those had expired and they had to do the new one. Yeah. Which means that their operating costs going forward might go up because their interest servicing cost is going to almost double from where it was before. So that could have an impact on them. And finally, I think the last point is more psychological, because slow, steady, and boring is not something people are interested in. They want to see a lot of action, right? Yes. And the extreme of that is Tesla, because Elon Musk goes and says something and all that stuff. And when Steve Jobs was alive, that was also an exciting stock. When like Tim Cook is a low profile guy and he doesn't do much. So Gilead is like a boring company which pays steady dividend. It has got revenues, reserves. It's steadily working away. It's not coming out into TikTok or Twitter or somewhere and making a big hue and cry or doing something controversial. So people are all like saying, okay, we'll go to something exciting like Bitcoin or something like that, which is trendy and going on. Maybe that's happening. Who knows, right? Yeah. There is always rotation from one sector to another. So that's my thought. Now, the next thing you wanted me to talk about was to talk about what I'm seeing in the technicals. So let me share the screen with you so that you can see what I am seeing.
Look.
And here we are. So this is the GILD chart, Gilead. And if I look at the duration, it's all 1-day candles. Nice. And what I see here is not very encouraging, because we had a huge gap down. So gap down, we always say that it has to be filled up. So I would naturally presume that there is going to be a bullish bias so that it can go up and fill this gap down. And this gap down happened immediately after the earnings, even though, as Sandeep explained, they outperformed the EPS by 19.5% and they outperformed the revenue by 3.5%, and still their forward guidance was weak. And those 3 data points that I was correlating, all that put together, it's given a bearish sentiment. Now, this particular formation, let me just reduce this to a triangle so that I can call it a pennant. So this is a bearish pennant on a bear channel. So prices are coming down and we have a pennant out here. Typically, a bearish pennant always breaks down on the downside. It'll break the support and come down instead of break through the resistance. That's what technicals say. Now, there's a conflict between this gap down wanting the price to go up and the bearish pennant wanting the price to go down. What will happen? If it did go down, I think there is a support here. This is a bull channel which we have, and this bull channel will give you support. And I think if the price breaks down from here, it might come down to somewhere around 74.52 or something, and then probably bounce back up again, because momentum is not too bad, even though it is below average, and MACD is also moving towards the signal line. And even if it breaks down from this diagonal line of support, there's a huge area of support out here, this blue rectangle that I have got here. So that's going to give a lot of support. So it should bounce back from there. If I had the money, I'll definitely try to buy Gilead when the price comes down, because boring is good for a retired person like me. Regular dividends and potential increase in share price, that would always excite me. So that's what I would like to say from a technical perspective, Sandeep. And yeah, so that's all I got. And today, friends, I have been a bit reluctant to speak too much because I have a viral fever, and I start coughing every once in a while. So I'm going to keep my talks short. And I really want to thank Sandeep for doing such a good job. And many of you have liked it. And I would really encourage you to put a like out there, because Sandeep is a new contributor. And every time he sees a like there and sees the number exceed, give him more likes than you give me. It'll encourage us to have a new program ongoing, which will become popular and help the channel. And yeah, Sandeep, thanks a lot. Do you have anything else you want to add, or you're done?
Thank you, Raj. Thank you for that insight. That was great. So, as we mentioned, big increase. I think it was about 33% increase in oncology. Maybe that might be the future, but we're gonna have to wait and see. And do your own due diligence. Check out your own fundamentals and see how you feel before investing. Don't just listen to two random friendos on YouTube.
You guys on YouTube, yeah. Yeah, I'm always careful to say that whenever people ask me, should I buy this share or should I buy that share? I tell them it's a point in time decision, just like appraisal of a property. It's valid for that moment of time. Once the moment is gone, it's gone. You need to do all the calculations in your head so that you're concurrent with the market reality and you have a greater chance of success. That's why I'm loath to giving any directions in terms of what will be the price. Always I say that this is my opinion. Please do your own due diligence, learn about it, and then do the investment or talk to your financial advisor. That applies here also, Sandeep. Well, a good point to bring up. So with that, my friends, I'd like to bring this video to an end, and I'll catch up with you again in the next video. And Sandeep will be back with us on Monday. And if you want him to profile any other company,
please
put it in the comment section, and we'll definitely look at that for you.
And my heart goes out to anyone suffering from any disease. Stay strong, and you have friends. But have a great week, friendos.
Yeah, thanks, and have a great day. Thanks, Sandeep, and bye, everybody.